Let's go off the charts with a company that might be off your radar a bit, Herbalife. Shares of the global nutrition company surging more than 140% for 1 year. It recently hit a new fresh 52-week high. It's down a little bit today on the trading session by 3% to 52 and change. It gained 55% year to date. Will investors' appetite for Herbalife continue or not? Joining us is Tim Ramey. He's the senior research analyst with D.A. Davidson. Welcome back. Pleasure to see you again.
Nice to see you, Sue.
You like this stock a lot for a 5-year period. One of the reasons is what you call their stunning balance sheet. Tell me.
Well, the balance sheet is really debt-free, and they like to buy back stock. They just increased their line of credit, and we do expect them to generate a lot of free cash flow and buy a lot of stock. They've got over an $800 million authorization in place.
All right. What about growth? I know that certainly in the United States, they own their particular space rather convincingly. But what about overseas? Recently, they've made inroads into Brazil.
They have, and China is huge as well. In fact, their entire developing market portfolio is growing at a 25% rate, so it's just on fire. And even with that kind of growth in the developing market, we're still seeing established markets growing at over 16%.
Your target is 68. The stock is down 3% today. Why? And would you accumulate it on a sell-off like this?
I don't know why the stock's off today, but I think Herbalife is set to have a wonderful 5-year period, and we like the stock. Our price target's 68, but I can see this being a much higher name in the future as well.
What about input costs for that company? They have a lot of packaging, they use a lot of petroleum-based products. Is that going to be an issue for them if oil continues to move higher?
Well, Sue, their product prices are pretty high. Their gross margins are over 80%. So the only thing else that I follow that has those kind of margins are, the distillers, the spirits companies. So very high margin business. I don't think input costs are going to be a big factor for them. In fact, their gross margins being leveraged by the strong growth to the top line.
All right. Thank you. Good to see you again, Tim.